Okay, so this is going to be one good NADRO trade, trade 6, a case for the need of excess in a dissonant area. Just my reminders to stay on point. And this particular video is going to be all about return pullbacks, so specifically when fading extremes is a good tactic to employ. So some notes on my niche. I trade the Ultra Bond exclusively. Right now, my intraday DVA is RTH. I have gotten rid of, this is a typo, I've gotten rid of the weekly. It's not a part of my charts anymore, so don't worry about that. I use distribution and structure as my leading narrative information. Then I look to add confluence with the monthly and weekly VWAPs. Something new is I've started to add and integrate volume profile into my structural narrative. So I use both market and volume profile. I use a volume profile on a bigger, higher time frame, and then I look at the market profile for my daily and immediate CVAs. So the narrative and the thesis. So the Ultra Bond story. The Ultra Bond was fairly rotational for the last few sessions, but this is expected from where we are in the higher time frame volume profile areas. The Ultra Bond is in a very dissonant area right now with the higher time frame offering some bullish levels and the more immediate picture actually being somewhat bullish. So we have this kind of back and forth between bears and bulls, and any kind of holding above the 223 by 20 area starts to shift this market dramatically on a technical level to accepting higher values. So my thesis is that the Ultra Bond is in a dissonant area and rotation is expected along with some similar order flow. Fading extremes is the best practice here unless a clear imbalance forms above that 223 by 20 area. So let's talk about why that area is so significant. What we're seeing here is a bigger, higher time frame volume profile. And this is pretty much the prior month. And this is the prior month point of control rate in this zone here. We also see some confluence with the current month with a developing value high for the current month. So this particular line in the sand right here is really, really important for the bears to hold because any acceptance picture above it would start to form back into these prior distributions here and possibly see rotations even higher into these areas here. So right now, this is kind of like an important inflection that we've seen rejections from. We saw one here, saw one here, saw one here. So there's been some significant bearish movement at this level. So it's something to watch out for in the technical perspective. Coming into the market profile, what do we see? We have a nice distribution on Friday that formed. This is the distribution that we're going to be talking about for the bullish narrative. Essentially, what we're getting at here is that this line in the sand here is our imbalanced up bullish idea. So this hold would be important for any kind of bullish expectations to the higher side. So we're kind of stuck in between a bearish line in the sand here on the higher time frame and a bullish line in the sand here on the more immediate market profile area. On top of that, we have a nice clear distribution in our market profile here that we would be working with as well. So this is that dissonant back and forth area that we're looking at. On the weekly, we have some support for the bulls in that we've had some key rejections here and here, and we're heading into our line in the sand area here. But we're holding above prior value high on the weekly, and we're now looking at that bullish type of narrative on any kind of pullbacks into these areas. The monthly is very rotational in nature, and we've seen a key hold here of that VWAP level, and we're holding above it now currently, so that gives us a little bit of a bullish edge to possibly see a test up into this area here. So understanding dissonance, this is kind of really important. This is the whole point of the video. What we're looking at here is a dissonance is often tricky to really integrate into your narrative. You don't really know which way to lean. Do you lean with the more immediate bullish narrative, or do you look at the more bearish level as the kind of key for your analysis for that day? So I've developed a few guiding questions to help me get through some of that and really set my priorities for the session and what side of the market I want to be more on. What's the significance of my level in terms of the structure of this market? Is there a reason to favor one side or another? And what's the resulting expectation for my line in the sand area? And what type of price action could I expect from those areas? These three questions are what I kind of use to guide which areas I want to be more involved in and why. So for me, let's talk about what these questions are. What's the significance of my levels? Well, if that bear line in the sand fails, the UB will be looking to accept higher value. That's really key. Since it's already rejected these higher values, we've now come to a point where it's a decision technical moment for this market. Is there a reason to favor one side or the other using delta or news? Well, the delta really isn't pressing any extremes or showing aggressive participation. So the bears and the bulls aren't really aggressive on either side. News isn't really major today either. So without any real catalyst, any breakout would be on a technical basis only, not on a news-driven one, and really not on any kind of delta aggression. So what's the resulting expectation from these line in the sands? Well, above the line in the sand, the big main line in the sand that we have, the red zone, is that a clear imbalance would be expected up above it, because now we'd be in that higher value range and we'd be looking to accept higher value. Below it, though, more rotational behavior is a little bit more likely because the delta isn't extreme and we have some good bullish narratives just below our key bearish inflection. So we're looking for excess in any kind of continuation position after excess is formed. We would want to see the excess, the prior excess that may have been formed, hold. So let's get into the market and what we're looking for today. So you can see here, here's that clear line in the sand area for the bulls that I want to be involved in. And then here's the bearish line in the sand area. And we've already seen some acceptance into the bullish area. So we're now kind of imbalanced up on the RTH, and we're looking for, pattern shifts and things like that at the line in the sand to start getting involved for the bears. So we come up into that section. We're still in that nice trending channel. We're not really pushing an extreme on DVA, so it's kind of like this is a nice steady grind. We're going to wait to see some kind of shift occur. Here, I think we get a little bit of a shift. We have that nice, medium-term break. Now we can start looking to fade extremes. I think this is a good place to start executing on the short side. Ultimately, that gets wicked up higher, and now we're in the real key area that we want to be looking to fade. This is a nice second standard deviation setup for the RTH session, if that's something that you're trying to learn from. Is this a true RPB? No. This is an advanced setup. This is something that you would see, confluence between your line in the sand and possibly order flow lineup, and this is an area that you'd like to be getting involved on an aggressive level. This isn't the conservative entry. This is more aggressive. We see that aggression pay out, and we basically rotate straight down to our bullish line in the sand area now. And now, because we're in that rotational kind of dissonant area where we're kind of pushing down from here, we want to expect and look for excess and rotation from here. So we want to kind of see something where we kind of push back up, come back down in. Now we want to start engaging in the longs because we're in a rotational context. We want to start looking for that RPB down below. So we start to see that expectation set up here. We got some nice clear excess in this zone with a good clear rejection of our value area on the market profile in this prior distribution that we had. So this is a good place to start looking to execute some longs. We get into the long section. We have our first hurdle, which is the VWAP area. That clears, and now we set up the really nice expectation, the RPB of my dreams. It's at a nice line in the sand that has already seen good price movement. We've set up excess here. So we want to see that excess hold. At this particular area here, you can kind of execute on a very, very thin, risk-reward ratio because essentially you're looking to hold this excess up above. So this is that clear, nice RPB that we're looking for. That holds, we come down into VWAP once again, test that area. We come right down into a destination where we are likely to see rotations higher once again. Now, here, we're starting to set up an area where there's not really a nice clean set of excess. We're kind of in a 1 or 2 tick range. So it's not nice excess like we saw up above here, which has a nice clear range above it. So my expectation would be to wait on this RPB and look for something possibly to push extremes. That's what we end up seeing. We see a nice little IPB for that bearish move continuation from this RPB, and we start to see a nice spring pattern entry here for this RPB on the bullish side here, right from the extremes. So we're testing the second standard deviation and then doing mean reversion in between. And that's really kind of the picture-perfect RPB rotational day in terms of like just setting up these plays on a regular basis. So this is just something I want to I was toying around with and wanted to show you. This is order flow, and I'm looking at order flow here in kind of a live setting. So let me start this and kind of show you what it looks like in the session. So the top here is the actual. So the top here is the actual market, and then this is the ETH and RTH order flow. First thing we see is at our line in the sand, sellers start to activate. And that's really important for us moving forward because that gives me an edge to the bearish side of things. What else is important is that we are below the zero level here on the ETH, and we're starting to test that area or accept below it here on the RTH. So we're going to be watching that as the bulls start to activate above our line in the sand, right? They come up, order flow pushes down more. Now we have that nice clean excess above our line in the sand, a nice RTH test of the zero line. This is a great place to be executing. That's that advanced second standard deviation entry that we had previously. Starts to come back down. What do we see? We see order flow come down, get rejected from our bullish area, and now we're rotational back inside. So what are we seeing here in that order flow? That real back and forth rotational expectation that we kind of established earlier with our narrative. So continuation to the downside here. We're in a bearish context here in the delta. You can start to see that there's a trend starting to occur, but the price really isn't going down with it yet. Now we get that clear break. Now we get that excess. So this excess makes sense in the order flow in this trending environment. And now we're kind of looking at, well, do you really want to be long from down here with this order flow picture? Probably not. Is it a valid setup according to the expectation of the narrative? Absolutely. And this will just finish out that early morning section or area where we start to see selling now starting to fail in the order flow section of things. And we start to see that failure here at the prior value as well. So that is that. Summary: understanding the price action expectation is important as the level itself. In other words, understanding what the condition resulting from that line in the sand is going to be key for figuring out what's important in terms of dissonance. From the condition type, the best practices for tactics can be applied. And if these tactics start to fail, this is information and a cue to shift your expectation with the market. Set your expectations in detail. Practice and internalize that detail because this information will then become second nature for you. For me, this particular area is like the perfect example of high dissonance between the more immediate bullish picture and the higher time frame bearish picture and how we can get involved on either edge. Me personally, I favor the bears in this day because of the order flow and the higher time frame importance of that level. So I was executing on the short side more than the long side. But that doesn't mean that there isn't opportunity there if that's something that you, in your dissonance picture, if recency is more important for you, then the bullish expectations would have been something you would have been tracking and honing in on as well.